Pretty much the same picture when it comes to the currencies front. We've got the dollar gaining ground, the euro still coming under pressure. Equities, though, looking far better. What is driving the currency market right now? Some would say that they would be optimistic because Ireland has now gotten this bailout package. What is the overriding factor today?
Good afternoon, Eleni. We did see the euro gain a little bit of comfort after the news was announced, but really the focus has shifted now to the other sort of European peripherals or Mediterranean countries, and Spain remains firmly in the spotlight now because they've got similar, smaller percentage ratios, but similar problems to Ireland and Greece, where their banks are pretty exposed. The sovereign, the nation has guaranteed the bank's balance sheets, and of course focus now shifting to their sustainability, whether they are able to fund their needs going forward. And it's not surprising that the euro has come under renewed pressure after an initial bounce, simply because these issues are not going to go away anytime at all. And I'm a little bit concerned, quite frankly, that this might escalate into a fully blown global debt crisis, simply when one looks at the US, when one looks at what Europe is doing, Japan in a similar position. These are really tough times, and the issues are not going to go away for some time to come.
Well, David, we keep hearing news about a permanent mechanism that needs to be put in place. We know that the initial bailouts fund was around 440 billion euro. Some say that is not going to be enough. And of course, we were talking a little earlier, and you alluded to the fact that most of these countries are bailing the debt-ridden countries out. So eventually it's going to be about who's going to bail out whom. And some of these countries that are still applying funds to the overall big mechanism, to the overall big fund, might also fall into that trap down the line.
Well, the problem is now that, initially the fund was supported by all the European nations. And as Greece has taken advantage of the bailout, and now Ireland and perhaps one or two more to come, then their contribution, of course, becomes superfluous. In fact, they're a drain from the system. And eventually what you potentially are left with is Germany and France supporting the entire mechanism. And that's why I think the EU has been very, very vociferous in trying to draw a line in the sand, trying to support Ireland so that the contagion doesn't spread to Spain. Of course, Portugal remains in the headlights as well, perhaps Italy on a smaller basis. And the EU very, very cognizant of the contagion and the fallout that could potentially take place, trying to draw a line in the sand. But that's why we're getting comments around perhaps the fund is not going to be big enough, particularly if you only got Germany and Spain carrying the can.
David, it's interesting to note you said it could turn out to be a global debt crisis. Is this why we're seeing flight back to the dollar? Do you think it's about flight back to safety at this point in time, which of course is interesting to note given the fact that the US is dealing with its own set of debt worries going forward?
Well, that's exactly the point. The US itself is not showing a great reason to be long of dollars, except for a so-called flight to quality or safe haven status, because they're dealing with their own issues, not only on a federal basis, but many of the states are essentially bankrupt. So, it's not as if the US is without its problems, although the economic data recently has started to show signs of a bounce and perhaps a little bit better off, and certainly a little bit of employment growth when one looks at the weekly jobless claims numbers. But this is, for me, is not about dollar strength, more about the European zone weakness, around about the contagion effects that could take place, and of course, as I say, focus firmly on Spain at this point.
Also interesting to note, though, David, the yen usually quite an important barometer when it comes to risk appetite or risk aversion, and the yen is starting to weaken against the dollar. What significance does this hold?
Well, I think it's simply a question of flight into the dollar at this point in time, safe haven status, looking at taking money out of riskier assets. The yen is a good barometer as far as risk appetite or risk concern is showing. And recently, as the dollar has gained some traction from risk aversion, then the yen has weakened on the back of that. So, if we continue to see this concern around debt levels play itself out, I wouldn't be surprised if the yen continues to weaken. And of course, they also beholden to what the Chinese do, whether the Chinese allow their currency to strengthen. They've held off post G20. In fact, the yuan has weakened a little bit after the G20 meeting. So, the Japanese currency, the yen, is caught between these two forces at this point in time, and very difficult for me to see the yen strengthening substantially in the current scenario.
David, looking at the South African bond market, we've seen a little bit of a sell-off. Do you think that this is going to prevail throughout the rest of 2010?
Well, I think it's really on the back of the risk aversion that we're seeing playing itself out in the world. In fact, we saw quite a substantial bond market sell-off, serious volumes being sold off from the foreign investors, and a very, very illiquid and choppy market. You know, last week alone, yields bounced on the R157s 50 basis points. That's not a normal situation for a bond market, and it just shows the extent that foreigners are pulling out of so-called riskier assets. The rand has kind of held its own, and the reason for that, despite the foreign selling, is that we've seen very, very good export supply going forward. As for the rest of the year, I can't see any reason to pile into risk assets at this point in time, particularly as we head towards the year end. And I think we will continue to see illiquid, choppy markets. I think we'll continue to see a flight to the dollar, and risk aversion being the name of the game at this point, Eleni.
David, where do you see the rand going forward from here? Do you think we're going to oscillate around the 710, 715 level?
Yeah, it will be very difficult for us, I think, to get below 7 again, you know, as we move towards the end of the year. We are, as I said, we are seeing very, very good export supply at these levels. So I think certainly 705 on the downside for now seems like a very good support level. I think if we get above 715, we could perhaps trade as high as 725. 715 on a daily close, we could trade as high as 725. But for now, export is capping the weakness, and therefore we should remain in this range.
Well, David, you know, I mean, I think the European Union has basically learned its lesson in terms of how quickly to sort out the debt worries over these countries. So we could hear news relatively soon about this permanent mechanism. Should that happen in time, and that will create more investor confidence when it comes to the Eurozone, doesn't that mean that the euro will strengthen extensively and perhaps more flight into emerging market currencies such as the rand?
Well, I don't think that's going to happen, you know, in 2010, Eleni. I certainly think they're working very hard to make sure that this crisis doesn't spread any further. It really is a crisis of confidence. The big question is, of course, where they're going to get the money. Is Germany just going to continue to fund this lot? Germany and France going to continue to fund this lot? It's a really, really precarious situation, and a lot of debate is going on at this point in time. Certainly they don't want the crisis to spread. Certainly they're going to work hard to try and avoid that happening. But the question is, where's the money going to come from, and can they appease the bond investors' confidence to ensure that the investors are going to remain around? At this point, it doesn't look very likely.
Well, they could always print, David. That's one solution.
Absolutely. Absolutely.